Hello, good morning. This is Zahur. I will be with you with the short review on Federal Reserve meeting, decisions they made, and market reactions. Uh, as you know, the Federal Reserve had a meeting, today's meeting on September 16 and 17. They made a decision as the market expected, cut the rates by 25 basis points. But several days ago, in last days, several times I mentioned that it's not important that how much Fed they will cut the rate because it's already priced in the market, and 25 basis point rate cut is something that we surely now something that's going to happen. But what was very important and most important to watch, it was the dot plots and the market expectations. Generally, what we can expect right now is that Federal Reserve expecting two more rate cuts based on the dot plots and what you can see in the projections that they had. Now they expect two more rate cuts for this year and one more rate cut for the next year till this time. So three rate cuts at least we have, 75 basis point rate cuts we have at least in the next 12 months. That's a little bit more than, a little like 25 basis point more than the previous expectations. So that in this case, we can say that the Federal Reserve was dovish. But if you go forward, before going to check the dot plots in more detail, let's check the Fed statement as well. The statement right after the meeting, which published, it shows that the Federal Reserve in this meeting, it's the Fed members, FOMC members in this meeting, they are mostly emphasizing on the labor market risks, on the economic growth risk more than the inflation risk. So, somehow the focus slightly turned toward economic growth and labor market, which is the negative generally, the generally negative idea on the stock market and what's going on. So what we can understand, what we can understand from this statement, the statement is dovish as the Fed focus turning towards economic growth and the labor market. Yes, sir. In last days, I mentioned that if the Fed's statements, the focus in the Fed statements is mostly about inflation risks, then we can call it a hawkish. But if the Fed's statements is mostly about this labor market, is about the economic growth, we can call it the dovish. So that can be called as a dovish. You saw the first reaction, the dollar fell to its more than 3.5 years low. But little bit after that, at the same time, they had a dot plus, but the little after that, the market just like went to the more detail and checked the dot plots. The dot plot is exactly opposite front or in opposite position of what we could see in the statement. The Fed members, they increased the economic growth expectations for 2025, 2026, and 2027. 1.4% economic growth of previous expectations increased to 1.6%. For 2026, it's increased to 1.8%, and for 2028, it's increased to for 2026, it increased to 1.8%, and for 2027, it's increased to 1.9%. That generally says that the Federal Reserve expect now the better economic growth for in the United States in this year, next year, and the year after that. Same for the labor market. If you see the unemployment rate is expected at 4.5% for the year end this year. For the next year, they expect lower unemployment rate. They expect a better labor markets with 4.4%. And then for the year after that, the unemployment rate is supposed to fall to 4.3% in 2027. And for 2028, they expect at 4.2%. Going forward, as for inflation, they didn't change the inflation expectation. They don't expect any lower inflation. So the inflation is still staying at the 3% as the previous expectations. But for the next year, they increased the inflation expectation from 2.4% to 2.6%. The same thing we can see for the core PCE price index as well. So the Federal Reserve expect a better economic growth. The Federal Reserve expect a lower unemployment rate. The Federal Reserve expect a higher inflation compared with the previous expectations, and now they expect at the same time the lower interest rates. Yeah, that's something that we cannot. These parts are not a part we can match it together. And if you go deeper to more, if you go, that's the as you know, this is a general chart which is the median numbers. But if you go to the deeper number, you can see that there is a huge difference between the higher and the lower expectations. That was something that we could see in a press conference also. The several times Mr. Powell has been asked that is there any just like disagreement, and like big disagreement between the members? Because that's not normal, when you see that's not economic side. I mean, not before we were, I mean, in July, we're expecting like generally two more rates cuts for this year, which for one for September and for one for December. Now the Fed cut the rates in September, and now again they expect two more rates cuts while they expect higher inflation and higher economic growth and lower unemployment rate. So that's what I can see. The personal is like 8 years. I'm watching the Fed meetings, like following the Fed meetings live with all the details. In the last 8 years, I mean, there's longer time than I'm watching the Fed, but in the last 8 years, I'm watching all meetings. What is going on around the Federal Reserve, the decisions they make, and whatever it is. That was the worst meeting that I saw in 8 years. I mean, the Federal Reserve really doesn't know what's doing. I mean, what's going on? I think in this meeting we could see the real mess. The worst meeting I saw in the past 8 years, where the Fed members really they do not know where the economic growth is, where the economy is going, and what they have to decide. Or at least this is what they show here. I mean, either they don't know, either they don't know what to do, either if they know what to do, they don't show that. I mean, the dot plot doesn't show that. So this uncertainty and this what we can see here is exactly this uncertainty is going on here, and this mass it's going on here is the same thing that we could see in the market. If you go and check if you go further and check the market reactions, let's start with the dollar. Let's start with the VIX. Yep, let's start with the VIX. Yeah, the best thing is start with is the VIX. The market risk. The market risk is just like when you see the market risk was at 15.2 on the Monday, getting closer to the Fed meeting. The uncertainty increased, along with other issues also in the market, but generally the uncertainty increased. And with this increasing uncertainty, we can see now the Fed rates, I mean, the VIX, we saw the VIX at above 18.4, which we're expecting to see much lower after Federal Reserve meeting, because the uncertainty is supposed to be gone as the Fed already makes its decision, and it says that, okay, that's what we decide, this is what it is, and then we can see we were expecting the lower uncertainty in the market. But what happened? Yeah, it's slightly decreased, but still staying at above 17.50. That means the market still doesn't know what's going on here. Yeah, we should wait a little bit more, 1 or 2 days. We have to wait and see the more how we can say that we can see more like bright. I mean, more idea from the Federal Reserve members what they are doing to. Sorry, more idea from the Federal Reserve members. So the Fed members now they can see that, okay, the Fed members. Sorry. We can expect the more the more brighter idea from the Fed members from their speeches in the next day. So then we can understand what exactly is going on, and that could be something that that's something that we can say, okay, now now we have more idea on what's going on here in the Federal Reserve, and we can expect a lower risk in the market. But again, if the different members if different members says that, okay, like again they have a different idea on what's going on, again this uncertainty continues. Same thing that happened can continue further. If you look at the dollar index, which fell to its more than 3.5 years low right after the statement, with the looking deeply on the dot plots, it increased towards 97 area. I mean, yeah, it's 90. Couldn't touch the 97 at 96.93, but still, it's increasing. I mean, because uncertainty and none of dollar index. I mean, these data, they were not the data that they can support the dollar. No, none. Because the uncertainty, I mean, the economic uncertainty means that when the policymakers, they don't know what to do exactly, they are somehow in the middle, divided, so that cannot support the I mean the country's economy. That's not a positive, something positive for the currency as well. But at the same time, they don't. It doesn't send a signal that okay, this dot plot. The thing is that dot plot is the personal and individual idea. It's not something that discussed with the others. I mean, for the other with other members, it's something like okay, that's my idea. That's it. That's my idea. That's the point, and that's my idea. Nothing more. So, but when we are coming to the decision, that ideas should be talked about. They should be able to convince others why I have this idea. So that's why the dot plots are important. But I mean, yeah, they are important. They affect the market, but how they react to these dot plots also is important. Yes, last night when we asked when Mr. Powell have been asked about the dot plots difference with the economic growth and GDP numbers that we saw here, he mentioned that yeah, that's a dot plot, that's a personal and individual idea. So which means that we have to watch the data more. That's increased. That was the reason we say that okay, now we have to see and check the market uncertainty again more again in the higher levels. That's why the stock markets right after the meet, I mean right after the meeting was like they fell, but they're counting now on the higher rates, higher more rates cut actually, or higher rates cuts, and they increased slightly after that. But that's not something that I do expect to see after this decision. I mean, this decision means that the policymakers doesn't know exactly where to go. They probably cut the rates for good. Yeah, but probably they for good. I mean, I mean, I don't think that they're gonna do just like they make a decision for a bad. They're gonna make a decision for a good. Now they expect the lower rates for a good. Okay, but lower rates and the higher inflation expectations are not such something that we can fix it. I mean, put it together. That's why the uncertainty in the market increase. That increasing in uncertain market uncertainty can increase the pressure on the stock markets as well. That's why I don't think that probably that increase could be the last increase, the last rise before next Fed members. That's something that economically should happen. I mean, from the economic point of view, that's something that we should see. Yeah, if we see other reasons to support the economy, to support the stock market, I don't know, but that's what that probably this economic data, expectations, dot plots, and GDP numbers and others, they all says that that can be the last rise before next Fed meeting, because the market doesn't know exactly where the Fed goes. So that's what we can see here and our expectation. Same thing I can expect for the Dow Jones, for the Nasdaq, and S&P 500. Same. I mean, on the other hand, for the gold which is falling right now, decreasing right now because of I mean, a stronger US dollar after the meeting. With uncertainty, the market can find the demand again, and probably above 3,600. Now it's 3,600, 3,640. Most probably above 3,600. It can stay above 3,600, and demand can increase here. And with the higher demand, we can say, okay, the higher demands here can increase the market. Can create the buy areas, opportunities in the market, and again, the gold can recover to the buy opportunity and the buy position, which is positive. It can be in a medium long term, could be positive. As for the energy market, for the oil, this decision is important, but the oil market right now in these days is very dependent on the geopolitical tensions. So these economic data goes for now for the gold, for the energy market, goes to the second, especially for the oil, it goes to the second so the second level of importance. As for the Bitcoin and the cryptocurrency, we can see like we can watch that from the different point of view. The first, like, Yeah, these data, they were so like if the Bitcoin goes towards, I mean, in line with the stock markets, that can we can say that was that could be the negative news for the cryptocurrency. But on the other hand, this uncertainty in the Fed member, uncertainty in the Fed decisions and outlook can increase the demand for the Bitcoin as well. As we can see, we wouldn't be too much happy about the stock markets, and we're not too much sure about the stock markets, while the bond yields also giving us lower rates, as the market now expecting a lower interest rates. So yeah, that was the market happened. What happened in the market, essentially, which I can say that, but generally, but we can say that. As for let me finish my sentence with the Bitcoin. The Bitcoin about 113,000 again and continuing. If you remember, yesterday we talked about 118,000 as the next level. We touched the 118,000 between 118 and 120. It's going to be the side movement about 120. Again, we can count on a higher rate towards 125. For now, 113 could be the like a pivot, and about 113 in a mid and longer term, the uptrend can continue. That was the Fed decision, market reactions, and our expectation. Have a good time. Bye bye.